And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning to my futures family. It is time for the market prep. Wednesday, April the 12th, the big day we've all been waiting for. CPI numbers already out. Now, just kind of looking at what we've got happening here. It looks like some of the inflation numbers of the CPI are showing taming inflation, but some of the core numbers are still looking relatively elevated. That's what came to mind when I first saw them, and it seems to be what is kind of being discussed in the media. So it's always a challenge to prepare for a day like today because things can change in a heartbeat. And as we always say on the market prep, anything can happen, and that is certainly true. So my name is John Hoagland. Thanks for trusting me with your time this morning. We're going to be trying to seek accurate context in these markets this morning, always thinking about risk management and remaining patient. And I think patience is going to be extremely important for traders today, at least from where I sit. If you're a very active trader and you do well in these volatile periods of time, God bless you. It's not my thing. So this morning, the 30-year mortgage rate came out 0.1% lower than last week. So that's, again, something good if you're looking for a home. CPI numbers, check them out, figure out what they mean. The market is going to digest all of that throughout the day today. And don't forget, there's more numbers tomorrow with the PPI. At 8:10, barkin', Fed member barkin', talking Fed is going to be barkin'. 9 o'clock, the Atlanta Fed inflation expectation, which is a minor number, but anything that's attached to inflation is going to be viewed by traders and investors. 9:30, the EIA petroleum status report is due out, and then 1 o'clock today, the FOMC minutes. When I sat down this morning, it was steady as steady can be as far as the U.S. equity index futures were concerned. Investors and traders are going to be weighing the Fed's next moves off of this information. Gold prices have pushed higher after at least one talking Fed, Kashkari, warns of possible recession this year. Did you guys see the dollar index this morning? The dollar is just getting whacked. Have you seen silver lately? Some of our flight to quality, even though the equities had a good pop off this number, gold and silver had a good pop as well, with the dollar dropping like a rock. Again, more data later as traders eye the FOMC minutes for, again, hints from the Fed about some of the banking sector issues that we've had lately. And again, more data tomorrow with the PPI. And as usual on Thursday, the jobless claims numbers. This morning, the last I checked, and these things are changing by the second, the VIX is up a little bit, 1936, where it was 1914 yesterday. Dollar index, last I looked, was 101.60, down hard. Yesterday at this time, 102.17. And the yield on the 10-year also took a hit to the downside after the numbers came out. 3.35% last I checked, or it was 3.4% yesterday. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome. Make sure you subscribe to our YouTube channel so you get notified when we do go live. I hope that you enjoyed the Coach's Playbook yesterday. We talked about the difference in strategies between range-bound trading and trending trading. Hopefully there was something in there you're going to be able to use moving forward. And we had a really good trade yesterday. It took us almost the entire session of Make Hogue Money to finally get into a position that we made about 15, I think 16 points on that. We didn't get to our profit target. The market never did. And I covered it right before the market fell apart at the end of the day yesterday. So thank you all for making Hogue a little bit of money yesterday. We do have group coaching today, which is at 12:15. There is the link to register. And we do have Make Hogue Money after that. You can watch it on YouTube. You can join us in the Zoom meeting. Whatever your choice is, it's up to you. And we look forward to having another successful Make Hogue Money today. All right. Good morning, Shaw. CPI, let the mayhem begin. You are the first one in the room winning the prize this morning. Timothy, good morning. Stephen, Brian, Terry, Scott saw, and he conquered. Alejandro, Serafide, good morning. I did not see any issues with the Trade of 8 after the release. Sometimes there is a lot of information coming at your computer when these things happen, but I didn't see any lags on my end. Hopefully that's pretty much the experience that everybody, most people had, at least I'm hoping. And good morning to you. Terry, Dan, good to see you. Tim, my brother Rick, love you. Sarah Hall, prayers and love as always. Andrew, Tom, my other brother, good to see you, buddy. I miss you guys. We got to get together soon. John, Rusty Golfer, Don, D.A., Robert, Bill, Les, Haggle Matters, good morning, John. George, Lacey is currently protecting the house. Don't know if you can hear her, but somebody's probably walking their dog, and Lacey is jealous of that always. So I'm sure she is saying good morning to everyone. Henry George Duque, good morning. Rooster, crowing early this morning, good to see you. Andy Bleed, Nisa, good morning. A.C.H, Tom, that's right. Gnostic, Shaw Cunningham, for that year over year, it doesn't look like what the Fed wants to see, yeah? Well, we're going to find out, right? We took a pretty good look above weekly kickoff high in the S&Ps. We have fallen back down below that level. I'm thinking there may be opportunity near that level in the regular trading hour session today. We'll take a look at that in the charts here very, very shortly. It's stabilized now, but when the news release happened, it lagged for about 5 minutes every single time. And you know, I have experienced that from time to time. I have a computer that is that I use for all this stuff, and then I have a computer that I trade on that there is nothing else on the computer, and I rarely see any issues on that dedicated computer. Maybe it's a function of having too many browsers open, too much going on in the computer. I am not sure, and I know we're always sensitive to those types of situations. So let our support team know of your experience today. Vlad, good morning. Pete, Marcelo, Jason, Rob T, Albert, Joe, good morning. Peace and love to you as well. Don Clemens, nice trade yesterday. That was a good one. Sound cut out. I hope it's back now. Steven, Caesar, Jay, Data, Eugene, morning. Bill has a healthy bark, that is for sure. Salt Bones, my guy, how are you doing? It's good to see you. All right, well, we're going to jump into the charts pretty quickly here. It's the afternoon session of Make Hogue Money, so we're going to have to see what happens. Okay, all right, sounds all good now. Must have been you. All right, well, it's good you're with us here, Travis, Mario. Let's jump in and take a good look at these charts. That's what we're here for anyway, right? Yeah, I wish I had a dedicated line directly to the exchanges. That would be nice, wouldn't it? Salt Bones and David, Eugene. Sound will cut out if you're using any other devices, any other drivers, microphones, sound apps. Bones, I will be. I'll look you up at some point this week. It'd be good to catch up. All right, let's take a look now. Here is the daily in the S&Ps. So it's either easier or more of a challenge for me to do my homework on days when things like this are coming out, because you can do hours of homework and have it mean nothing, and you can do little homework and see something during the day that offers you a good opportunity. So we are and have been, since the number came out, testing the upper extreme of the area of balance that we've been in. The last week's high and weekly kickoff high, I'm looking at as the upper extreme of I'm looking at as the kind of the upper extreme of the area of balance we're in. What I'm looking for at weekly kickoff high up here is for longer time frame participants to have to adjust inventory. Whether they adjust inventory by getting out of longs or adding to short positions, or being forced to add to long positions or cover shorts above this level, either way is fine with me, because I'm hoping that it gives me opportunity at or close to this level. Remember, any levels that we discuss are zones. There's nothing finite in trading. Once in a while, we'll hit a weekly kickoff high or low to the tick, but that's dumb luck. I'm not saying that we're going to be able to do that and do that all the time. Sometimes these weekly kickoff numbers or levels become kind of moot when something changes as drastically as it can on days like today. Now, the knee-jerk reaction, I thought, was a little bit overdone today. Looking at the dome here on the S&Ps, the blood has come back into it. We're starting to see, upper 2-digit numbers and lower 3-digit numbers on each bid and offer. So the liquidity has come back into the market. If you saw it at 7:30, there were single-digit bid and offers. That's why these moves become so vicious, because there's nobody there to take the other sides of these trades. So you get these big moves, and then everybody settles down and comes back into the marketplace, and then we get the liquidity back. So we're already seeing the liquidity back in the market. So my thought was, if this was a downside move, I was going to be really looking for the market to hold 4,100, 4080, the low from last week. Market went the other way. Well, I'm looking for the market to give me some sort of opportunity at last week's high / weekly kickoff high. And we may have that opportunity today. But again, anything can happen. Yesterday, look at these 2 days. They're very indecisive. They're both dojis. There was very little change in open interest. As a matter of fact, yesterday we lost 3,300 in open interest. That delta divergence that we saw yesterday was probably more likely a short covering squeeze from longer time frames, getting the short time frame traders too short. And then once they were done and they took themselves out of the market fell like a rock. So it makes sense to me that we lost about 3,300 in open interest. Here's what it looks like on the 30-minute chart. So here was, I'm not getting the delta here. Let me F-bomb this thing. If you want to, you can hit F5 and it's going to reboot the platform without causing you to reopen it. And then we're going to see the delta. So here's the delta from yesterday. So we had the kind of lower delta. It kind of squeezed its way up. And once the delta was back to even or positive, I think that's when the longer time frame traders that were kind of holding the market higher and squeezing the shorts, they vacated. Elvis left the building, and our shorts were gratified by a move back down to settlement. So here's our move from today. No overnight inventory. The number comes out. It tests right up to and through weekly kickoff high. There is an old point of control way up here that has been left out and hasn't been taken out in regular trading hours. The one thing that we have done again now, the recent high Last week's high was in the overnight session, extended trading hour session. Now we've extended that even further in the extended trading hour session. So you're going to be cautious up here. I believe there's opportunity up in this area, but it's a pretty big range with a lot of risk. We're looking at 10 points between weekly kickoff high and this naked point of control up here. So be cautious, try and look for good trade location and or some sort of structure you can lean on in the day time frame. Okay, here's the TPO chart from yesterday. It looks just like a normal variation trading day. You get the IB was neither the high nor the low. We looked lower, we rejected, we rotated higher and higher and higher and higher. We couldn't take out we barely took out the overnight high yesterday. And when we couldn't really hold above that, that's when I said, you know what? I don't think we're going to make 41.55, which was our target yesterday. So I got out at 49. So we were at 33 was our long. We got out at 49. So 16 points, a pretty good chunk of the range from yesterday. And I'm glad I did, because looking at this at the end of the day when the market fell apart, that would have been interesting. So here's the overnight. Here's our profile from last night, but no real good information here except for the fact that we had an excess low and a low excess high yesterday on the S&Ps. Well, here we go. We got about a half an hour before the open. We're going to take a look and see what happens. I'm going to stay patient. These markets will not ruin my day. I used to have a boss on the trading floor. He would walk up when we were putting the deck together and getting all our orders together and everything, and he'd look at us all and say, "You are not going to ruin my day." Well, these markets are not going to ruin my day. Not going to put myself in a position to get angry, frustrated, full of venom, or spiteful in these markets. These markets will do that to you. They're not going to do that to me today. Here's the crude oil. So we're now in rollover in crude. Well, it looks like we got a little bit of a reaction off that number. We are currently holding price above the area of balance that we've been in. There was no change in open interest yesterday overall, but the May contract lost 23,000 in open interest, and all the future months made up for it. Zero change in open interest, but losing 23,000 in the May contract reminds us that we are in rollover. We're going to roll probably the end of this week, early next week. I'll be watching the volume and letting you know when I will be switching to the June contract. So we may be falling more into range-bound activity due to rollover. We know that our longer time frame traders try not to be directional during rollover so that they can get themselves a cheap rollover or even make money on their rollover. So we'll have to see how that plays out. Well, looks like we got a little knee-jerk, and looks like we've opened above last week's high. There's an indication of possible acceptance of higher pricing. Here's our open. This is the 8 o'clock bar. We've opened above it. Overnight inventory ended up being a little bit maybe long, maybe. So, the overnight high, pretty much last week's high, a pullback to that level could offer an opportunity to limit risk. Last week's high, resistant on the way up. Will it be supportive on the way back down? Here's the TPO chart from yesterday. Double distribution / trend day to the upside with no change in open interest overall. The buying that came in to take out that 23,000 contract loss in the May contract was what created this opportunity. We were right at the low of the range yesterday. We found buyers. Now we're above the high of this range. Are we going to continue to see buyers here? And let's see if we see the opening range as the low of the day. We do not. We took one little look down below the opening range. So, the opening range play is kind of moot now. But we've got a gap. And if we can't close this gap, then we're looking for opportunities to continue this move to the upside. Where was weekly kickoff high 79.60, which we were down about yesterday? 83.05. 83.05 is pretty much just 83 is weekly kickoff high. That goes to a long time ago. But look at the range we had yesterday. Heck, we could do it today if we may remain above last week's high. NASDAQ. Here's the daily. Still range bound. Looks like it's enjoying a bouncy day today, but still no play with the extreme on either side. Still very range bound. Almost a yawn is what I'm hearing here from the NASDAQ. Good morning, Vince. Good morning, Leland. Here's the 30-minute chart. Yesterday was all inside value, repair day, repair day, repair day. Little bit of a jump to the upside. I'm going to really stay patient in the crude in the NASDAQ today. It's really been stingy on some of its nuances. Yesterday, here you can see we just repaired these holes. We repaired these holes. Normal variation, a selling tail on the top, a low excess low, but now because of new news, we're moving higher. So again, I'm going with gap rules today. We may open with a gap. We may not open with a gap. Look at gold. Gold has been towing the line, and it did add 2,500 in open interest off that line yesterday. Volume has been kind of slow, but we know what we've had coming at us this week. Volume much better today. Almost equal to what it did all day yesterday. It's going to be a high volume type day. What else do we have here? I put in this trend line because the high was right at that trend line. It seems as though this market was starting to coil. We can still move that trend line to the high here. So it's still coiling. We've got the upward trend line here. We've got this trend line here. Similar to what happened here, if we do break out to the upside or to the downside, there could be a bigger move in this. Here's the 30. We had a bull flag that we were watching on this, and we came out of it yesterday kind of through attrition. No momentum yesterday, no big increase in open interest or volume. But now we see our dollar take a dive. Where are we going? It looks almost like this has been short time frame controlled activity as the market stopped pretty much at this value high, the last value high, before we look to points higher. Oh man, I wish that I could just write a roadmap for each of these markets and play them like a concert pianist, but I can't. There's always changes. It always makes things more difficult and a little bit more blurry to think about what's going on when there is an economic or a news event. These things have never been my strong suit. I'm a much better trader when things aren't so volatile. There's not so much news in the market, and I can use the information that the profiles are providing for me to look for good opportunities. And it does look like we created a gap. What about the TPO chart here? So in the 930 open, we created a gap. Look at the profile yesterday. This was something I was very interested in in noticing and telling you guys yesterday, we had sort of a repair day. No, there's no activity here, high and low here, no activity here to here. We filled that in yesterday with an excess low and a low excess high, normal variation day, IB low, neutral. But there were nuances in this profile that said we got too cheap here and the upside auction did not finish. So that kind of makes sense that the market moved higher after that news came out. But anything could have happened. Looking backwards, I can say, oh yeah, we knew this was going to happen, but we didn't know anything was going to happen. Nobody knows. Nobody knows. So I'm going to be looking at potential for continuation to the upside, looking for opportunities to buy weakness, but I have to, again, be looking for short time frame structure, day time frame structure with which to lean on. I'm not going to be doing anything until I can locate what I think is a cheap execution where I don't have to pay a lot to find out I'm wrong. And those might be a little hard to come by in some of these markets today. All right. All right, so what are we on? We're on now the euro. The euro also towing the line with upside structure. Kind of falling into upside digestion, I was looking at it, but we did take that look above last week's high. I think last week's high might be an interesting opportunity for us to be able to limit risk at some point today. Open interest to increase yesterday, 5,300. Volume was a little bit higher. This tells me, buyers are still willing to come into this market. We'll see what happens today. Because again, anything can happen. A.C.H, anything can happen. You got to keep, of course, we all know this. We say it every day. You got to keep your eye on the dollar, right? I mean, the dollar dove. These markets took off. What about the 30-minute? What are we learning here? Overnight inventory was long. The number came out. We ran to the upside. No gap, but we could, at some point, begin to find some sort of balance here. And this single line of TPOs, I will view somewhat as a gap. There's no balance there. There's very little volume there. So I can kind of look at that as a gap, right? It's excess. The single TPOs are excess below price at this time. Here's the TPO chart. Yesterday, no gap close. IB, neither the high nor the low. Normal variation, neutral trading day, which is, I think, really what we were expecting from most of these markets yesterday because we knew what was coming out today. No gap, continuation, last week's high. Interesting. Stay patient. How about the 10-year? So we saw the rate drop. We're seeing prices rally. Not bad volume here so far. The upside remains intact. We have held this line. And we're still looking to buy weakness until something changes. Of course, we're going to be kind of looking at volume as kind of low, but a higher yesterday. We added 9,700 in open interest yesterday, which is somewhat inert in the 10-year. It's such a thick market. And again, anything can happen. Here's the 30. Boom! Rates drop, and we see the market rally. I don't know if this means anything for future rate hikes, if they're going to slow, if they're going to stop. What are they going to do? Nobody knows, but this is all, of course, speculation, and that's the name of the game. So we really didn't have any overnight inventory. We are getting a little bit long up here, I would think. Going to try and stay, again, patient. Here's the TPOs. We had excess low excess, excess, low excess, excess, no excess. Open and range and value, the numbers come out and pow, things change. This could be a whole lot of excess down here if we continue to push this market higher, which, we do have visuals on either side that are within reach. Points of control, a very prominent point of control here, point of control here. Man, it irks me to think that I can't see into the future. So we've got a little lack of momentum here in the natural gas after our reversal pattern here. What did we do yesterday? We lost 15,000 in open interest overall, but 49,000 contracts were lost in the May contract. So in essence, we added open interest on an up day yesterday in some way. Where did it go? Where did we add open interest? It's such a volatile, crazy day. We can't tell. Last week's high here. We settled here. There's no overnight inventory. There's no reason to get excited about doing anything in this market. Take a look at this profile. Don't get too excited. Excess, IB, neither side is the extreme. This is such a balanced day, and we're right in the middle of it. So be patient. Do not try and pick a direction from this level. We're right in the middle. I'm not dying. Even if I was trading the natural gas, I don't think I'd be doing anything right here, and that is for sure. So, all right. Hindsight bias is a mind trap. How about it, right? Heard something yesterday, Salt Bones, from a trader that resonated with me, and it was activity versus productivity. As a trader, which one is more important? I'd say definitely productivity. Stay patient, look for a good trade. Baby Blue, how much do you average a day or a year? Well, I've had, I don't know an average. I've had years where I lost money. And I've had years where I've made a lot of money. I've had days where I've lost a lot of money, days that I've made a lot of money. I don't really measure myself that way. As long as I'm moving forward, then I'm happy. I try not to have any expectations or goals financially or time-based goals because I found that those are kind of counterintuitive to me. If I have a financial goal that I want to make a certain amount of money today or this week or this month, if I'm not achieving it, it may not always be my fault. Maybe the market hasn't been gratuitous enough for me. But if I start to try and push to get to those levels, I'm taking myself out of the process. Yes, we are going to be doing Make Hogue Money in a different fashion. We're going to be doing it 4 days in the morning instead of 2 in the morning and 2 in the afternoon. We do have some changes with the market prep and Make Hogue Money and some other things coming soon. I've been kind of foreboding these things for a while now, and I apologize. They're taking a little bit longer to come to fruition than I thought, but we hope that you're going to enjoy them. So I'm looking forward to seeing everybody today in Make Hogue Money, and even before that at group coaching. Let's get prepared for our trading day today. I'm just going to do a lot of watching initially. Take your deep breath. Stay humble, grateful, creative, and centered in your trading today. I will be, again, looking forward to seeing you later. If I don't, trade well, be kind to yourself, be kind to others, say a prayer for peace. Blessings to you all. I'll see you later on. Have a great day.